Testing, what's up? Hello, hello. We appear to be live. Okay, let's see if we can share this link. Yep. All right, we got the live chat. Let me just share the link. All right, we'll get started here in just a minute. Usually we're doing our Zoom call this time, but um, our very talented producers are both on the road in this awesome outfitted van. Um, Daniel, who helps me do all the recording and the streaming on this, and he posts all the cool content on the Dipcatcher's social media accounts. Uh, he's an entrepreneur, and him and one of his friends who I've met before, they've actually launched something called Outdoor, or it's a camper van on Outdoorsy that they're leasing out, and so Daniel and Colleen are out working on the van. So real exciting thing that they're doing. So they weren't able to join the live call. So we just thought we would do maybe a shorter call or a shorter stream today where we're just going to be looking at charts. There have been a lot of good buying opportunities over this past week because the markets have been in a short down cycle, and so this is the perfect time to identify things that are maybe at a good bargain, and then taking action if you feel so inclined. So but in the meantime, check out I'll put the link here in the chat if it lets me share it. Um, Check that out if you want to if you're in California and you want to have an exciting camping trip in a van. Check that out. So let me before we get started, I'm just going to share the link to a couple more places, and then we're gonna get going. All right, I'm just sharing the link. So what we're going to be doing today is we're going to be looking at just all types of coins, a lot of stuff on Uniswap, maybe some stuff on Kraken, um, and so we're going to be looking at a lot of charts, saving them, maybe make some predictions, maybe look for some buy orders to make. And if you have any coins that you want to go over, just put them in the chat. I'll try to run through them all. Anything that some people this week have asked me to look at a couple, or people have just asked me in general about some. So now's a good time just to if you think of a coin that you'd like to learn a little bit more about, look at a chart, think about buying. We can take a look, and I'll try to give my honest opinion. Um, so let me just finish sending this link out, and we'll get started. All right. So I guess let me just check. Usually Daniel's the one who's got this live stream on lock, and I swear I was like a caveman trying to get this thing set up. It just would not work, and I had like videos, screen record videos open um, that were like 12 gigabytes. That like so I couldn't shut things. I don't know. It was a mess, but hopefully we're live. If anyone in the chat can verify that the sound is on, just let me know. But I'm just gonna assume that it's on because the streaming thing appears to be on. So if the chat is, if someone in the chat could let me know if it's the audio's fine, that'd be great. I can't really pull it up on my phone. Chat can verify that the okay. All right. That looks good. Oh, last thing. Let's see if we can do this. Let's open up this. We get a little screen recording right here. And we are going to trying to get my video. Okay. All right. If we can't get my, let's see. Try. This doesn't work now. Okay, that's fine. That'll probably mess things up. All right, so let's take a look. So where I like to, we can start with some of the DeFi coins. So one place that I like, a tool that I've set up that you can feel free to use. It's called Hex.cash. It's just like it's where I buy and sell Hex. But it has the Uniswap charts built in, and it's got a trading portal here that you can like the default one that you open up to is it's the hex pair, but if you have the contract address to anything, you can just swap it out. So I like this site just because I built it, because most sites don't have the chart and the trading in one portal. So here's just where we're going to be looking at the charts. So why don't we just go ahead and start with one of our favorites, Hex. We've done a lot of analysis on just like what these market cycles look like. But so Hex has been in, like, whenever I'm looking at things, it's best to look at like a long-term time frame, a mid-term time frame, and a short-term time frame. So when you just look at the long-term time frame and the long-term trend, pretty much no matter how you draw it, it's on a strong uptrend. Where it's measured in dollars, it has gone from, like, let's just say, from right here, like right in the middle of that bottom, up to where it is now. It's up something like 3,000%. It's been as high as 6,000%. And so just over, and it launched under a year ago. And so since the launch, it's been a really strong performer. A lot of that has to do with the mechanism design, where it rewards long-term holders. And so a lot of like the early adopters who are like, buying in these first couple of months, a lot of them were locking up their coins because, that in Hex, the way you earn more interest is by locking coins for longer. And so locking the coins, earlier, like these will be the first people that earn like these massive APYs at the end of their, say 15-year time locks. And so a lot of people who are the buyers early in this time, they're locked in for 10 plus years. And so just having that like base of buyers from the start, that really helped push the price up. And then we've had some, pretty big, just like because all of this trades on Uniswap, you can track every trade. And so you can go to like Hex.Vision and you can take a look at the Uniswap pairs. I wish that something like Hex.Vision existed for other coins. Because like all of these things, like they're all trading on Uniswap, so it's all the same contract. So getting this data for other coins would be so amazing. But on this site, you can actually like dig into the Uniswap trading. And so we've done this on the show before where like, live we'll see like a massive green candle or a massive red candle. And then we'll just take a look and you can see these breakdowns of like, who the buyers and sellers are. And there have been like throughout Hex's history, there have been some like massive buyers that, that like really made a difference. Like this green candle right here was somebody who somehow related to like the Ethereum Genesis block. So a massive long-time ETH holder bought like doubled the price of Hex in a single order. And so there have been some like big movements, and that's pretty much true for every coin. Is that most of the most of the gains, they're going to happen in a short period of time. Like most of the gains happen, during 10 calendar days, of the year. Like that, it's just kind of like a rule of thumb. And we saw it play out in Hex. You see it play out in Bitcoin too. Like most of the gains are like the days that you see where it's like a 20% run. And so, that's really the like the whole like reason why trying to buy like finding coins that are in long-term uptrends, and then like being able to buy into dips. That's usually a pretty good strategy because by buying dips, it increases the chance that you're going to be in the game on the days that have the 20% gains. Those 10 days out of the year that have the largest returns. You want to be in on those days. So buying coins that are like in long-term uptrends, but are in like the bottom part of like a shorter term time range, then like those are things that you want to be accumulating. And so like so on the long term, Hex is in like a strong uptrend. So that's a check. But in like the medium term, Hex is actually in a downtrend. We've actually been like in Hex, we've actually been in a, let's say, let's measure this. Since these highs back in May, we've been in a 130-day downtrend where where we sold off like 66%, and so like that that's a pretty considerable downtrend, and so and we've had a recovery, so we're down about 46% from the all-time highs measured in dollars, and so the things that are working for the price of Hex right now is this trend line that we just drew right here. That's working for price. Like people look at this line and they think it's bullish, so that pushes the price up. The other thing is that price is above like this level, so when we zoom in on this, like price had like tested this before and then hit all-time highs and then had never broken past this level. So this is like this one right here. Let's change the color. So these green things are things pushing price up, but the things pushing price down is this line right there. Let's make that red. Let's make this line red. We'll draw from like there to there. So these are things pushing the price down. And so, the area you want to buy near the lines of forces that are pushing the price up. And so, like if you're looking to only buy at really low prices, you might want to wait a couple of days to buy hex, because maybe price is like you want to buy closer to these green lines right here. And so when we zoom in, let's zoom in on here. You probably want to wait to if you want to be prudent, you can wait to buy when price gets closer to these green lines. Just because if you approach this, this is like a range. So let's pull up it's called the Gann box. So if you treat from like this high to low as like 0 to 100, you want to be in the bottom quartile. You want to be in the bottom 25%. And so that means that you want to be buying, down in here. And price, like areas where price is most likely to rebound are lines where price had previously rebounded from. And so, if a conservative approach with hex would be to maybe wait a little bit, because hex just had this big run up that had a lot to do with the recent uni airdrop. A lot of funds from uni ended up in hex. I got some free hex from some uni. That always feels awesome. And so so that pushed it up. And even though this is a good sign of, this is like a triple bottom we saw here, like price hit here, here, and here, and then rebounded. Like price didn't continue down. Like price, if it would have continued down, we'd have had to fight past to get back over this green line. And so hex did have a strong sign of trend reversal right there with that triple bottom on the daily chart. And then now what it's doing is it's retesting this other level. Some people call this a mid-range zone. It's like the area in between the forces pushing down and the forces pushing up. And so in this case, the mid-range zone of this like hex range that we've been in since April is somewhere around here. And so right now, this is something that price had bounced off of from above, bounced off, and then it transitioned and held underneath from below, and then held from below again, went through, held from below. And so price needs to make it past this level before it goes and starts to fight back to get over these red lines. And so what that's what we're going to be looking for here is if price is going to go up above here, then it'll be less likely that it hits these green lines, and so we'll probably look for dips back down to this blue line. But if price does not hold above this, we want to be ready, because if price goes back down, it has a high likelihood of revisiting these areas. So as far as hex goes, in the long term, based on the weekly chart, it's still we're still below, we're right around the midway point from this high to this low, so that's still a fine dip to catch. But you may be able to find some better buy opportunities here in the next couple weeks, because we're still even though we've been over the last couple of weeks we've been kind of rebounding off of this bottom. We found the bottom. That doesn't mean that price won't come back and hit this bottom again. When we've had some pretty long down cycles, and that's mainly because there was just so much hysteria and hype. Like people, rushed in, and so a lot of people that like had bought high, some of them are cutting losses and selling low. And so, we're still fighting against this downtrend that we've been in over the last couple of months. But it is starting to see signs of recovery. And so this is actually a really good time to be looking for dips. And so, you know, be on the lookout for like other big red days, because like there's enough people that bought above where price is right now that probably still want to get out, where we might see, more selling off, and that's probably the dip you want to catch. So from like a more conservative perspective, with the hex price, be on the lookout for more dips, because this is one that like. If you can, the lower you can get in on your price, that can really have a long compounded effect. Like some coins, like it doesn't really matter how high or low you buy it, but like, hex. There's kind of two sides of this equation. On one side, the more hex you can get, the more hex shares you can get, and the more hex shares you can get, the more interest you can get on your stake. And so, if you can get in at a lower price, and get 10% more shares or 10% more hex, and then you can, if you can stake that at the maximum length, that 10% difference in share rate, or in shares that you get, can actually make a massive difference towards the end of your stake. Because as your long-term stake winds down, you have a majority, like the percentage of the total share pool that you have grows over time. So you're earning more and more interest every single day as that long-term stake winds down. And that 10% extra shares today, could make a really big difference on those last couple days way down the road. So, buying hex at a good price actually does make a good difference if your strategy is the long-term stake. But if your strategy is like a short to midterm stake, the interest you can earn can actually offset buying it not the lowest price that you could. Like you could have bought hex at a certain price and then had the price go down. But if over that time, you're earning interest in staking, it can actually kind of like, make up for, not buying it like the lowest price you could have. And so that makes a little bit of a difference. But overall, like, but buying dips is good. And so, if we were, looking at this chart like last week, we would have definitely been buying. We would have been buying this all the way. And we have been buying like hex throughout all these dips, because, back here, like this is the type of dip you want to average down into when price is like, nearing this like long-term low, and like in a sell-off. That's when you want to start averaging in, because you want to be there for when price has like the big recoveries. And since the bottom of this recent dip on hex, it's gone up 70%. And so you want to be there for those 70% gains. And in things that are so volatile, like these new cryptocurrencies, price can like go down and then fully retrace in just a matter of days. And so, like if you're able to just like average in, you're just putting the odds in your favor that you'll be able to experience the days or the weeks where price goes up 70%, because all it's doing is retracing back to where it was. And so maybe last week or 2 weeks ago, that would have been like a textbook dip to catch. But hex is like right in the middle of this mid-range zone. So rather than buying right now, maybe just save up some, maybe take profit from other things or start saving up some money that you can then put in hex. And what we'll be looking for is for price to come back down to this, to meet this like green area, and then we'll buy. Or what we can do is, if price continues to go up, we'll look for something like this on the chart where price goes up into this zone, where and then price to come back down and retest one of these other levels. So we'll wait for a dip that maybe comes back down to this line right there, like that old time high, kind of where this one turned around. So rather than buying right now, we're gonna wait for like either a further down dip on Hex, or we're gonna wait for Hex to move another leg up, and then we want to catch this dip that's from potentially like the last wave of sellers that are going to push the price down at this all-time high that we've tested twice. Right there, we couldn't get past it. Long-term downtrend. Tried it again, got strongly rejected. Couldn't get past it. Went down even further. So there might be one more wave of sellers at this area, and so you can either just buy some Hex now and just long-term stake, forget about it. You'll do fine, but we'll probably, since Hex is one we're always trying to accumulate. Like it's good to try to get in at a good price, and so what we'll do is we're gonna if it goes up, we should wait for another retrace till price is in a similar area to where it is now. But that's probably the dip that we'll want to latch onto if price continues to go up. So yeah, let's take a screenshot of this. I'm gonna share it in the Telegram chat. Oh, what's up, Stan? Oh, I see the chat. It's Fresh Boy Will. We got Solomon and Stan. What's up? So here, let me share this. Okay. So next thing I want to look at, let's take a look at Uni. So if you're here last week, we talked about the craziness that was Uni. So Uni was an airdrop, and they gave it to every address that had ever used Uniswap. So Uniswap is Uniswap. It's the DeFi trading platform. It's a smart contract. The best part about Uniswap is that you're in possession of your coins at all times. It's not like Coinbase where you have to deposit your crypto and then you can trade. All you have to do is have a MetaMask wallet that you control, and then when you want to make a trade in a single transaction, your coins go to the contract, and the contract sends you the coin that you're trading for. And so it's like a big breakthrough in trading. It's allowing markets to form in a really organic way where you don't have to have any counterparty risk. And so it allows price to be even more accurate. And because the way it works, where it's not like a centralized counterparty providing liquidity, it has incentives for people to provide liquidity. It actually enables people to earn income on their crypto by providing liquidity. So it's like a massive breakthrough in the space. That's been the fuel for all the craziness that we've seen. But just last week, Uniswap launched Uni, and they airdropped it to every single person every address that had ever used Uniswap. And so that was a pretty remarkable feeling. Like it was so crazy because Uni was like the price just pumped right after everyone got it for free. And usually when there's an airdrop, the price just dumps because everyone's just dumping their free money. But Uni actually pumped. I think for a couple of reasons. One was just FOMO, because there were a lot of people that didn't get it. There were a ton of people that got it, but a lot of people in crypto that just like either poo-pooed at Uniswap or just never did it. They just buy on Coinbase, and that's all they do. A lot of people didn't get it, so there was some FOMO there, and also it had some elements of coins that had pumped a lot, like for instance, YFI. So YFI was a coin that also was just launched for free to users of a platform, and so it launched for free. It pumped, and then had a pretty big sell off. But it's called a governance coin. It's a coin that has some type of voting power. So that's kind of like a common thing in some of these projects. They add this like governance layer. I think it's a big form of overhead, actually. Like, I'm not really that much of a fan of actually like the act of having people vote on decisions. I think that's like, probably the way that you get the wrong answer. So I'm not really that into the governance aspect. Um, but the like people speculate on governance because sometimes there are people that like want to have a say, and so they buy up all the governance coins. So sometimes these can pump just because people are trying to like impact decisions. Like, sometimes it could be bad actors that are trying to like manipulate the rules. And so governance coins, there can be value in them more if people value the thing that they are governing more so than like the governance being like an effective model for like a crypto system. But I mean, that's just my opinion. Other people really like them, and if other people like them, that means there's going to be demand. So those are fine ones to try to invest in and trade in. And that's what Uni is. It pretty much does nothing. It's kind of like fake governance because there's like the minimum number of votes required to open up a proposal is something that like I think might be impossible to attain, like based on the distribution. So like there probably won't be any like governance going on because nobody can like submit a proposal. But at what people are kind of treating it like is kind of like BNB, which is Binance's coin, where if you have BNB coin, you can get like cash back kind of in the like a trading fee, like you get paid from the trading fees, and there's some other benefits to it. So people might think that might be the case, and since Uniswap is the Uniswap transaction fees. Uniswap transaction fees. Let's see if we can find some charts here. Let's see if we can find anything interesting. But like Uniswap transaction fees are like higher than the Bitcoin mining rewards. So it's like a massive, massive market. And so the like people, even though holding Uni token gives you no equity ownership in Uniswap, it's kind of like an adjacent thing you can own where like if Uniswap is succeeding, then perhaps the Uni token will succeed purely because people just like assign the value from the Uniswap smart contract protocol to the Uni coin, which is really just like it's kind of like it's like holding stock in the Green Bay Packers. I remember someone that I went to high school with was like very proud of his Green Bay Packers stock that he had. He had the certificate and everything, and like that I think is what Uni might actually kind of be like. It's like it's a governance coin, but your vote doesn't matter, and but maybe the price is going to go up because these things just trade. It's just supply and demand, and price can just pump in these things so Uni's a really interesting one to watch. For this one, look to take profit, but you don't want to take profit too early, especially if you got it for free. Some people view things that you get for free as things that you should just dump right away, but sometimes you can get things for free where dumping right away isn't the right solution. So, because if everybody who got it for free just all dumped, they, sooner or later they'll run out of coins to dump. And if the people who are like, so you got to look at like who are the people buying, and maybe the people who are getting it for free are just going to sell at a low price to the people who have a serious interest in accumulating it. And those types of people really push the price up because they eat up a lot of the supply. that they have no intention of selling, for many, many years. So, you know, trying to sell just because you got for free could be a double-edged sword. Like, you don't want to leave free money on the table, but also, like, because you have nothing to lose, you should have a higher tolerance for risk. And you know, the like you'd feel pretty silly if the thing that you got for free went up 100% and then you sold it and then it went up 10,000%. Like, you feel really dumb. And because, like, you truly have nothing to lose, you have unrealized gains to lose. But so take some profit, but like, just how far it can go up versus how far it can go down is orders of magnitude difference. And so uni is definitely an interesting one. And I think that like the initial distribution, that might be part of the grand scheme, because a lot of coins, they get a lot of flack for giving a large percentage to the founders. And so, usually they do that either through like a pre-mine or some type of like founder reward, or, you name it. And even though they have that with uni, like, the founders get a big amount that like vests over some period of time. All the coins that they give away for free might just be a way to covertly like allocate like that same percentage of the supply they might have just taken, by adding to their founder reward. But maybe rather than just like getting that from the start, they just wanted to give a bunch of it away for free at the very beginning, and then have that supply just be sold off, and then they just buy in. They're the ones who are buying at that price, and then they end up with all the coins, and then they pump the price. So, maybe that could be it. Maybe the Uniswap, like, because of how much they gave away for free, like compared to the Hex airdrop, where like per Bitcoin you got like 20,000 Hex. Forgot what it was. That was like such a tiny amount. Like, especially at the time when the price was really low. Now it's higher. It's more significant. But I think if I remember right, at the launch, like per Bitcoin, it was only something like $8 to $12. Like, which is great. Like, it introduced a lot of people to Hex, but the airdrop itself was pretty insignificant. And a lot of those coins are like, they're locked up for a year, and a lot of people worry about that dump happening. But in Hex, it was such a small amount that was given for free. Most of it has been bought. Like, most of it has been acquired through the adoption amplifier auctions or just on Uniswap. So, like, a lot just, barely any was given for free. So there's like barely any to like dump to push the price down. But in Uni, like, they gave so much away for free while providing some type of liquidity, that maybe it's all just like a way for the founders to get more coins in a way that appears fair. Maybe this is some like covert, 5-dimensional chess that they're playing, which would be, incredibly savvy. Like, that's really smart. Like, maybe don't just take all the coins for yourself, because then the market might view that as like supply centralization risk. Some people don't like that. But, if they can achieve the same amount of supply, by giving it to retail and letting them dump the price, at the very start, into their hands, then maybe that's a good way to launch these things, where give the public an opportunity to sell at whatever price, and like find the price floor that way. So who knows? Maybe that's what this was, because it was shocking how much it was worth. Like, that had me thinking something else was going on. But what's pretty funny is that, like, in most things in the world, if something sounds too good to be true, it's probably a scam. But in crypto, like, things that sound too good to be true, sometimes like they very well are. And so, but they are true. And so that's what we're seeing play out with Uni. So it's pretty exciting to watch. it's been in a pretty strong recovery. So this is another one that, you know, if you had, bought more uni here or just held on to your uni, that's, you know, the dip kind of came, kind of like how we saw in that hex chart. We want to look for like another, if you're going to look to buy, especially this coin that a lot of people are getting for free, you want to look for like another dip down to this level. So, because so far in 3 days, uni has recovered 50% after, so like when we look at this, started, it's kind of hard to tell where it started. I just view like, one of these bottoms from, bottom to top, it was like 230%, and then has sold off something like 60%. So, and it's already recovered 50%. So, this dip happened, but, what you want to look similar on the hex chart, either look for price to come and revisit this area, like look for it to, come back down to here and try to buy, somewhere down here. One of these two blue lines. Try to buy there. But if price continues to go up, if price doesn't go there, if instead it comes back up to this all-time high, try to look for the people who are taking profit because they saw it go up this high before. The money they got for free, they didn't sell. They watched it sell off 60%. Now they're seeing it recover, and they want to sell like back when they thought they should have sold. Be on the lookout for people in that category to be taking profit and selling more of their free coins, and look for price to dip down to, one of these levels. Like look for a level where price had previously hit. So, from above and below. So like right here, price hit there, came down, then busted through, and then, just find a couple and you can just kind of average. You don't even need to be that accurate. Just somewhere that like price had kind of bounced around. So like, let's just like draw that line right there. This is like an area where price is, if price comes up and hits this red line, it has a really good chance of coming back down and reversing at a line where price had bounced off of from below. So right there and right there. So those are two scenarios that could play out, and be on the lookout for good times to take profit in uni. Like if you have debt to pay off in other things, maybe it's a good thing to buy, or a good time to sell. Here as it gets close to this red band. But if you truly got it for free, you might as well keep it, because you have no idea. Like craziness can happen. Like the crazier the outcome is, like the more likely it is, honestly. And so, uni could go to zero, but if you aren't going to lose anything for it other than unrealized gains, then you might as well just hold on to it. Or if you do sell it, put it in something that's going to like work for you. Like don't just sell it for like spending money. Invest in something that's going to like work for you. So like buying Hex and staking it for 15 years. You got it for free and you can get a lot of it. And so why not put that into Hex for 15 years? Maybe you want to diversify into other types of investment. There are some things in the public markets, for the first time really, that have really caught my attention, that I've been, wanting to get into. So, maybe sell some uni to, invest in some other things that, maybe are outside of your main focus, but are things you might want to start learning more about. But if you're going to sell the uni, put it to work. If not, maybe wait for like another like massive pump. Because what could happen with uni is all these people that sold to push the price down. Here, let me save this. All the people that sold to push this price down, and all the people that are going to be selling as price returns. Like if you just view all those people as like a herd. Like this is like a herd of sheep, a herd of water buffaloes, a murder of crow, whatever they are. They travel in a group and they get they scared by the same thing and they all kind of follow the leader. Um, so we've got all these people that sold their free uni down here. Um, what happens when price breaks out above the previous all-time high? What happens? Like look at it from their perspective. They got this thing for free. They saw it go up 200%, and then they started selling. And then they went and bought something stupid, whatever they bought with that free money. And then they see price break out from, this all-time high. Like the amount of FOMO that could kick off from this, where people, sold something they got for free and then price kept running. Like all these people who have sold during this time are candidates. They're FOMO candidates for when price, breaks out of this downtrend. So all these people, in there, say, I don't know, say like 30% of people are like rabidly FOMO, rabidly, like they'll FOMO into anything, always losing trades, but they not catching dips. They're buying high and selling low, like that type of people. Like what happens, like, when price breaks out of here, like all those people are just going to FOMO in here. And so that'll push the price up. And then as like those people are like FOMOing in, all the people who sold here and then are buying higher, now their profit expectation even goes up. So like those are probably like long-term holders, unless they just sell when price goes down again. But like, some of the supply gets eaten up. And then as those people like pushing the price up, then like all the people that never had uni, that like missed it on this first wave, didn't catch this dip, missed it on the second wave, all those people are going to pile in. And then what it turns into is everybody, like, so if price continues to go up, so this wave of FOMO kicks off like the next wave of FOMO. All the people that had ever bought are all in profit. And so, they won't be as anxious to sell. They might just be letting this run because, maybe the people who got it for free from the beginning are like in this for life, ready to ride this thing to whatever because they don't care at all. Maybe they're already rich in other cryptos. Those people may not be selling. Maybe these people are to be the ones taking profit, but they just have so much less of the supply than some of these people. And so just like the more people that the coin can get that aren't sitting at a loss, the more it can just like explode to the upside. And so that's what I'll probably be looking for is like a first wave of FOMO of people who had sold through here and then bought when it had broken out. And then, so maybe we can look at that. Like we'll look at the Uniswap like trading pairs. We'd probably look here on, let's find Uni. See if we can find all the trades. Yeah. So we can go to the site and then look at all the trades. Look at who these people are. It's like this person just they bought $17,000 worth of Uni. Let's just look at theirs. So that's all they have. They're all in Uni. They have no ETH, 0.1 ETH. They have gas ETH, and they have 17K of Uni, and then some of these random coins. So, we can be looking. Maybe that's something that we'll build is something to look at. Like, find all the people who sold their Uni down here, and get an alert if they bought back in. If they FOMO'd back in. And so, we'll be looking for like that first wave of FOMO that maybe kicks off the next wave of FOMO. These would be like new addresses that never had Uni, who are, chasing this FOMO. um, and then when like people start acting stupid, like acting crazy, like when you wake up and the uni price is like so absurd that you feel like you have to puke, that's when you should probably sell some. So I think Uni's got another wave of FOMO just baked into based on how they did the distribution. So um, you know maybe buy some. Maybe not today just because price is pumping, but that's what can happen in these things. Price can just run. So if you're so compelled, we're still in a dip. Just like with Hex, like if you already have some, maybe just wait for more of a dip. If you're just getting in for the first time, you know, maybe just like buy a little bit, because you don't want to be FOMOing in later. But if you're more strategic about trying to get a good price, look for price to revisit this level, or wait for it to go up more and then revisit this level. So I'll share this screenshot in the Telegram chat. But yeah, that's Uni's probably got some FOMO baked in. So don't want to discount that. So what else? So I know Will asked. Let me look at my phone to see which ones that um, let's see what coins. Next coin. Okay, so Will said to take a look at Doge. So let's just go to TradingView. Oh my God, Ty told me to short Nikola and I didn't know how. Oh, great call, Ty. Oh, I said I would short on the next exit scam pump on Nikola. Well, I don't know. I don't even know where to short on those markets. I'm so outside of that game. So you have no advantage. That's the only problem. Like stocks are like cool and all, but you just have like the least advantage. Like in crypto, like at least it's more of a level playing field. Like the only way you get an advantage is having more money, which is fine. Like it's better to have more money, but just like having more information, or like getting the information first, or like being able to place orders at better prices. That's where those you have no advantage. You buying on Robinhood, like you're the last person to know. So enough on that. We're taking a look at Doge. I wonder where Doge has been around the longest. Let's want to look at that chart. All right. Okay. Wow. So with things like Doge, like it's like I'll show you an example. Like Doge BTC, it's better to look at them at things measured against Bitcoin versus measured against dollars, because the dollars, like even though it like it's sometimes easier to like reason about, but it doesn't really paint the whole picture, because like um, you know the most altcoins that aren't on the Ethereum ecosystem, they kind of move with Bitcoin. Bitcoin's kind of like the like reserve trading asset, like outside of the Ethereum ecosystem. So with coins like Dogecoin, it's like best to measure in Bitcoin. Um, you know, but just like if we're like, okay, this is a really short term chart. Let's just go back to Doge Bitcoin. So kind of how we did on the last one, we're gonna like look at like the long term. So overall, it's been in a it's near the all time lows measured in Bitcoin, and Doge has this property about it for almost no reason, that it'll just like randomly pump and then just like completely retrace, then randomly pump, completely retrace. Part of that just has to do with like Doge being more of like a collectible, more so than like a financial asset. It's more like it's like a rare Beanie Baby, or like a rare trading card, where like the people that have massive amounts of Doge, they probably also have a massive amount of Bitcoin, and So like they're not really looking to sell their Doge because like they feel no financial pressure. Um, and you know, so it's more like a collectible. And so like times where like someone bids the price up, it just quickly gets eaten down. You know, and especially because like I mean this was 2014. The world was so different then. Like say like it really kind of started around here. Like it really hasn't done anything against Bitcoin. I mean it stayed pretty flat, which is actually like a pretty like that's actually really strong. Like across all time, um, you know Dogecoin has maintained a let's leave out those like massive wicks. It's pretty much held a like a 400% range about Bitcoin for 6 years. So that is actually really strong. Like even though like if you had bought Doge when it was higher, like right in the middle of this zone, like you're down 60% measured in Bitcoin. But compared to like what dollars are down in that same time period, that's like a bit that's massive. So like Dogecoin, it's a tough one to like. It's something that like there's no reason that like it's not one that's like necessarily very actively traded. Like when you look at the daily chart here, like candles that look like this mean that like there's two trades that happened that day. Like the trade that pushed it up and the trade that pushed it right back to where it was. Like it's got such low trading activity that it's just like not like that good of a like yeah it's at this low and then sometimes Doge pumps from these lows just from like random things. Like this pump that happened in July was like a TikTok meme. Um, so like Doge can pump and it like pumps regularly, but other than this TikTok meme, since for about a year, it's just done nothing because all the like high movement, like high volatility trades that people like used to look for Dogecoin for, like people used to look to Dogecoin for these like high volatility like ranges, but now so much of that is just going on in the Ethereum ecosystem through Uniswap that you know like if you were to buy Doge to try to trade this pump cycle, now would be a fine time to do it because it's like near the all-time lows, but it could stay around these all-time lows literally for like twice as long as this. So if we pulled up these like cyclical lines, Doge has been in this area, for that long. Price could stay in this area for like two more of these, all the way till like 2023. You could be holding your Doge, waiting for a pump. Maybe the price only pumps 56%. Like that's nothing. On a TikTok meme, price of pumps. So I wouldn't recommend the Doge. Just there are just other things you can. If you're gonna buy Doge, buy it as like a collectible. Buy it as something for fun. Don't buy it like as part of like a serious investment strategy. Because, but if you do buy it, just look for a pump to sell it to. That's the game here. But other things are pumping that are like you don't because there's nowhere you can trade Doge trustlessly. Like there's no Uniswap for Doge because it's like its own blockchain. So a lot of the people that are like trading these like high risk things, they're doing it somewhere else. So I wouldn't expect a lot out of Doge. So let's see, what's the other coin that Holocoin? We'll ask about Holocoin. I've never one person had told me about it. I didn't know what it was. Let's look at it. Let's look at the dollar chart. It's easier to reason about. Actually, let's look at the Bitcoin. Okay, so I don't know anything about Hollow. I don't know if this it's something. Let's see if it's trading on Uniswap. So it's not there. Let's check one other place. CoinGecko. That's not it. Where's Hollow? Oh, hot. Okay. Okay, so let's take a look at the chart. All right, well, that thing's been moving. Oh, I guess that's not very much. Okay, let's see how long this has been around. So let's look at the all-time chart. So this looks like the class of coins that launched, maybe had their ICO in late 2017 or early 2018, and then it, fought through 2018 bear market, and then 2019. So Bitcoin. Okay, let's look at the price measured in Bitcoin. Okay, totally different story. So let's see which one is which. Price measured in Bitcoin is going to be the 12, and then now it's 30. Okay, yeah. So measured in Bitcoin, during the Bitcoin, like this is pretty common for. I mean, some coins just dumped, so that's actually a good sign that it had some steam during 2018 when Bitcoin was going straight down. But then in 2019, in like so it looks like it had like a massive run. Like so, Bitcoin was at its lowest in January of 2019. That was like the 3K bottom, and so a lot of coins outperformed Bitcoin during that time because Bitcoin just like dumped from like 6K to 3K. Forgot exactly what that was, but like so some coins performed well against Bitcoin just because like they weren't selling faster than Bitcoin was selling off. So, but I mean, even still, it looks like Hollow had a good run during 2019. Bitcoin really took off in 20. So maybe this sell-off measured in Bitcoin was when Bitcoin had its bottom and then continued to perform really strongly and break out of that long-term bottom up and through this through the summer of 2019. And you can see that the price measured in Bitcoin is going down, but the price of Hollow measured in dollars is going up. So that means that Bitcoin was going up a lot and Hollow was going down relative to Bitcoin, but not faster than Bitcoin was going up in dollars. So the price of Hollow was going up in dollars. So, measured in Bitcoin, you had losses. Measured in Hollow, you had profits. But, it's so that's a fine scenario. But pretty much after that, Hollow hasn't really moved. It's just it's been trending down. Measured in Bitcoin since then, and measured in dollars, it's been trending down since, for over a year. So that's usually not a good sign for these altcoins. Like a lot of like altcoins, like their long-term prospects are, they're sometimes just based on, like when they launched. Because if something launches and then it just like it launches during a bear market, it's like really hard for it to recover because like maybe around the launch there's a lot of hype, but then as the bear market starts to set in, it has like a lot of early bag holders that are sitting on a loss, and that's like the worst thing for the coin because like all those people that like bought at a higher price, if there's a lot of buying activity early on, but then no new buyers ever came back in, you have a lot of people who are trying to cut their losses, and so that can take like years and years for these like for the early bag holders to like sell out all their coins, and then by then like the market may have just moved on to something entirely new. So that's probably like the big risk in something like this is that just when it launched back in May of 2018, like those coins just like maybe there's some exceptions, maybe like BNB is an example, but that launched earlier than that. Um, but pretty much anything that like launched early 2018, um, unless it's like Chainlink, which I'm not exactly sure when that launched, unless they were like a big breakout success. Those ones probably aren't going to pump because like why would they? Like at this point, like the things that are pumping in this market are on Uniswap, and part of what's causing them to pump is just that they're so new, and going from like 0 holders and like 0 people that own it to like 1,000 can like massively push the price up. So like because there are no bag holders, and especially as people are like really starting to fine tune these launches, either through like the Uni airdrop or through the like auction, like the year-long auction, like Hex, or some of these other launches. People are really starting to optimize these, and those are the coins that can like really go up because there's just nothing holding them down, as opposed to things like Hollow. Um, there's just a lot holding it down because everybody who ever bought at a higher price that's been holding onto it for like so long, watching everybody get rich on Uniswap, while they're stuck holding Hollow. Like yeah, maybe like it could pump like another one of these like pumps like this, but these things just have so many forces working against them that like it's just a tough thing to hold because like all like let's change. I'll draw in red everything working against it. That's working against it in price. That's working against it in price. That's working against it in price. That's working against it. This is working against it. Like, it's got so many things working against it over the course of a couple years that in order for price to go back up, it's going to have to fight through all these red lines. And so, that's just a tough one. If you're going to buy it, like, yeah, this is like all-time lows, maybe the best time ever to buy. And, if you buy down here, to go up 100%, it only needs to get back to like, it only needs to fight through one level and reach, it only needs to get to like the next level that it's going to have to fight against. So like gaining 100%, like, it very well could, but it could also go down like going down another 80% would be like totally within this channel. Like if you draw this like downward channel the price has been in, from this bottom through that bottom through that bottom. Price has been in this downwards channel that like, price very well could go down all the way to there. And so price could go down another 90%. So like, don't bet the farm on this. If you have like a hunch, I never want to lead someone away from an opportunity. But this just has a lot of things working against it. The timing of when it launched, a lot of these, previous pumps that never really played out into long-term buy support. And is Hollow on Uniswap? So it's a smart contract platform. So that's tough. I don't even know what this is. So let's if it's on Etherscan, let's see if there's a Uniswap market for it. Okay, 40,000 addresses. So if you bought now, you wouldn't necessarily be early. So if you want to look at a coin you find the coin, and you can copy, and then you can just take it to hex.cash and hit trade. And we're gonna do, okay, so this is on Uniswap. What is this? This is a burden wallet, so I got a hard time remembering passwords. So let's just see what if there's any liquid. Yeah. So okay. So it looks like it's trading on Uniswap. Let's see if we can go to pools.fyi. Okay, so there's a hot pair. Let's see how much liquidity there is. Yeah, so this only has $23,000 of liquidity. So let's see how active trading is. Yeah, there's no trading going on. So if we go back to, say, like the 22nd to the 25th, let's see what the last 3 days look like. Okay, literally nobody's trade. There have been 3 trades in the last. Oh, no, okay, no. Yeah, look how far apart these trades are. Hours apart, 4 hours, 10 minutes, 3 hours, hour, 1 minute. So like, there's just not much going on here. So those aren't really the things that you want to be buying. You want to buy things that are like, you know, in a market where there's a lot of activity, and things where there aren't a lot of bag holders. I don't know if I wouldn't recommend this. You know, unless you have a hunch you want to do it. You know, feel free. This is not financial advice. This is just my opinion. But you know, there's hundreds of better opportunities than Hollow. But great question. Let's see. So there are a couple ones that I've been wanting to look at. So one is YFI. This is one that like you know, you don't catch everything like that. You know, that's something that like okay, stagnant. Oh, stagnant coin. Yeah, that's right. That's, you know, kind of what it is. One that I've been, you know, looking at is YFI. I just never took action on it. It's one of those things that like I saw, like, you know, because I follow, you know, a lot of the development in the space. So, you know, I hear about these things really early, but I just never took action. I was just like, I don't know, and I just never like. But I'm sitting there, but you know, it's one of the ones that I was like looking at the price. So okay, this is actually a pretty good dip. Looks like it. So this is one, it launched a lot like Uni did. And maybe that's what we're seeing. Like maybe this is where we're at in the Uni life cycle. Maybe we're like right, like when we pulled up when we pull up the Uni chart. Maybe that's where we're at. So let's pull those up side by side. That's so funny. Okay, so if, you know, say, so this is Uni. Say this is where we're at right here, where it had the first little like, you know, snap up on the launch, trace back down, and then had a big move up, and then had a big move down, and then we may be right here in the Uni life cycle, where, you know, we might be. Let's circle this on the chart. That's wrong arrow. So right there on the chart is probably, or not gonna say probably, maybe we are right there. You know, similar. Like maybe that's where we're at with Uni. because Wi-Fi had a similar launch. It launched for free to people who had provided liquidity for a certain platform, and it's a governance coin for the Yearn. It's for Yearn.finance. It's the governance coin for this site. So where they have all these different ways for, like, it's a yield farming thing. Go back and look at some of our yield farming videos. We talked all about it. Wi-Fi is a really low supply, so the like the 71 ETH per coin as opposed to 100th of an ETH per uni. So Wi-Fi is definitely, it's just got a higher supply. But so, don't look at it in that, like, just look at it in percentages. Let's see. Okay. So, like, let's just look at it in terms of the, percentages from, just like, say this, like, it's hard to look at like the very bottom, but just from, like, somewhere near the bottom, but it wasn't totally the bottom, just gives you like a better percentage just to, to look at it. Because if you look at the way bottom, like thousands of percent, it kind of loses their meaning. But it's all relative because it's percentages. So, from the all-time high, it's, midway through. So if we just measured the, let's see this. He's made this measurement. Yeah, that's right. So measure from the bottom to the high. We're close to this 50% one. Like, these are actually good dips to buy, like, on like a long term, like in this like 50 to 6.618 range. Like, if this is it appears to be in a really strong uptrend. The only people that are in a loss are like these people. So this one, because it's kind of like a darling in the DeFi space, and a lot of people, it looks like a lot of people have been taking profit. Like, a lot of people who have bought down here, taking profit here, or a lot of people that got it for free, taking profit. So, this is actually like a really strong area to actually be buying in. So it's, just like as far as like the daily chart goes, because, like, we're amidst this like massive sell-off here, in a coin that has strong prospects because it's like related to governance, and YFI is grown to be like one of the leaders in the space of like yield farming, and kind of how like with the Unicoin, that could just succeed purely because the thing that's related to is viewed as successful, even though there's nothing about the Yearn finance protocol that makes the price of Wi-Fi go up. They're like unrelated. The people's perspective on it, which is really what you're trading here, that can, people just view it positively if Yearn continues to grow as a serious player in the space. So, Wi-Fi, this is like a good time to buy. A lot of people were like chasing the tops here. Not a good strategy. Like this, like when we say like look for a big dip to buy, look for like weeks of selling. Like this is it. Like looking on the weekly chart, we're near this like 50% range right there, near where price had kind of turned around before. So price could very well go lower, but you might as well start averaging in. So just on first look, I think that that Wi-Fi is probably going to be one that recovers. So maybe we can start looking for entries into Wi-Fi. But yeah, so this is pretty interesting. The financial ecosystem that's being built up in Yearn are really interesting. They're building these protocols that are decentralized alternatives to other types of financial industries. So the vaults, for instance, that's related to like it's like saving money in a bank account that's like making money by like lending it. So the vaults is one where you deposit ETH and then it earns ETH for you. Earn is like another one, where they help you like arbitrage between different platforms that you can earn interest on by lending. So it's like automated arbitrage for interest rate. Like it's automated interest rate arbitrage. It's like a big Wall Street industry that is now happening in this setting where like, it's not a counterparty that's doing it. It's a smart contract. So, that's pretty interesting. Zap, that's like this appears to be like a layer 2, like quick transaction platform. So that's pretty interesting. Cover is, it's like an insurance product. You can like insure against, like all types of things. So, it's probably more like a, this one is more like it's like an options contract. So let's see what this means. Add cover. Yeah, we'll have to go into this another day, but Yearn just has all these things. All these different, smart contracts that if they succeed, then that brings a lot of attention to the YFI token, which has nothing to do with it, and so that could push the price up. This is probably one that I've been looking at. I'm glad to see this is in a pretty good dip. So maybe after the stream, unless everyone here just front runs me, maybe I might buy some. So so YFI, this is a we're definitely one to look at. Yep, it's like that's like that's really what you're looking for. You're looking for things in strong uptrends that are experiencing like a couple weeks of sell pressure. But you never want to just go all in at once. So you want to kind of average out. Like kind of what we're looking for here is we want to see price hit this level, go up a little bit, maybe to this line, and then price to go back down. Like we ideally want something like that, but we can at least start averaging. But never go all in on anything. Unless you have really high conviction and you're willing to bear that risk. It's better to like average into things and then but then mainly focus on things that have a long-term savings or like long-term hold use case. But there's always great opportunities, like high growth opportunities in this space. These are very risky. So, always do your own research and make sure you're like, what you're doing. And if you lose money, I'm not responsible. So, but have fun. That learning is fun, and the more practice you get in this stuff, the more you can like, make certain decisions on your own. So, this is definitely an exciting coin that's at the center of this like really exciting area of innovation. So YFI, we'll take a look at that one. Another one of these like DeFi darlings is SNX. So let's take a look at it. So this is one that has been around a while and was like had massive performance, from, say just like down here. So not even fully at the bottom, a couple 100% gains from the very bottom. It's like, 1,000%. That's really good. Ideally we would have been in there buying this dip. Kind of like, remember earlier we mentioned that like Hex had seen that like triple bottom. That's kind of what we saw here, where price hit there, and there. Price sold off, and then it had like a big move up. What could happen is we may see that same thing but reverse. Where even though it's like made a new all-time high, maybe what price does is it kind of repeats that action. So we had that one sell off there, another sell-off right here, and then maybe price comes back up again. Maybe that's like halfway there, and then has another sell-off there, and then maybe price pushes back down to here. So, you know, if you caught this dip, great. And if you caught these dips, you know, that's also good too. Like this is a good dip to catch because, you know, it's a price where price had hit from below and then from above. So, you know, maybe that's where like if we were to like average into this one, probably the places that you would want to start averaging, if you were to break it up into like 3 orders, maybe one right there where price had hit and then reversed, and then maybe here like where price had like hit from below and then, you know, it was strong from above, then it like held below and then burst through. Like if price breaks this blue level, it's probably going to hit this next blue level. So that's, you know, it could go there. But then, you know, then be ready. Like if you're going to buy this, have more money waiting on the sidelines in case price goes down here. So then if, you know, price, you know, reaches here, then your average price will be somewhere in the middle. And if, you know, price does, you know, like averaging into this middle, like, you know, that's probably a fine price because price had spent so much time above it and below it. It's spent about equal time above and below. So that's like a fair market price. So like, you know, over this entire period of time, like if price returns down to this level, then what that means is that like price would have spent like an equal time above and below, and the average would be sometime somewhere in here. So buying at that long-term average, that's like, you know, that's like a good like long-term strategy. You know, but as far as like chasing into this one, you probably don't want to chase into this one just yet. You know, at least wait for it to kind of retrace down here. That would be, let's zoom in and measure. You know, because like this one's been recovering. You don't want to necessarily chase into these dips. You know, wait for a retrace, even if it's above where it is right now. Buying on a retrace can sometimes produce better results because it at least gives you a chance for that to be a dip, as opposed to this, like, you know, price could just keep running or it could just dip and now you're left holding the bag. So, you know, price like from this bottom has already regained 40%. So maybe just wait, you know, wait for a retrace on this one. You know, maybe like a 20%, 20, 30% retrace. You know, if you're like dying to buy this thing, you know, maybe just buy some now and then try to average it on dips. But I wouldn't say this is like quite in the range where like, you know, we probably want to see price test this level again before we like for sure buy. So SNX, you know, it's just like another one that's like a strong DeFi performer, but you know, maybe wait for like another wave of sellers before you enter this one. Okay, Will in the chat said EOSDT. What is EOSDT? Let's see, EOSDT. Stablecoin on EOS blockchain. Okay, so okay, that's pretty interesting. So a dollar peg currency that, okay, safe, stable, transparent. So the problem with things on EOS is just that there's just like not that much activity on EOS. Like all the liquidity is in the Ethereum ecosystem because Ethereum, like, let's see, is there a Uniswap for EOS? Omega. Let's see if Omega. Let's take a look at this. Come on, EOS, pump already. I want to go to my parents' house before 30. Let's see what this is all about. So like the thing that just like for things that are on EOS, it's pretty difficult for them because just all the actions on Ethereum. So all the big whales are on Ethereum, and let's see if they. See if Nebula actually is a thing. Okay, so like yeah, like so EOS just doesn't really have like the DeFi ecosystem that Ethereum does. So even though EOS is like kind of like Ethereum in some ways, it's like a smart contract platform and like an ecosystem. It just there's just not a lot of activity going on. So there's just like not going to be like as many opportunities as in other things. And this is a stable coin. So stable coins, the best way to like trade stable coins is really to be a liquidity provider on Uniswap. So because if they're pegged to $1, if they have some price range they're trying to keep, it's you're more profitable in just like by putting them in one of these liquidity pools. So like for instance, if you had USDC and USDT, you could provide liquidity to this pool and be earning 2% per year or 2% per month, which is pretty high. And it doesn't appear that there is that on EOS. Like I don't think EOS has like this type of stablecoin liquidity pools that you can like earn that type of ROI on, because you earn that ROI from the trades. And like look here, like there's so much trading going on. So like $2 million of trading volume happening on the USDC USDT pair. These are ERC20 tokens. These are on the Ethereum blockchain. So there's like $2 million of volume on this pair alone, and that's like really profitable if you're the holder. And so like the EOS stuff, like yeah, things can pump on EOS. So like let's see if we can find some examples of like EOS coins pump. Like coins built on EOS. Let's see the EOS DeFi. Okay, so I don't know if okay, so decentralized exchange. Okay, here we go. So Bancor maybe. Okay, so let's see what trades on Bancor. This will let us know, because I see you said doing some migration tonight. And so like, if you have like conviction about it, maybe because there could be opportunities there. Let's just look at the volume. So like on EOS. So let's see. So 24-hour change. Let's see the things that are pumping on this. So I mean, it looks like things pump on here, but I mean, look, liquidity depth, $239. So like, yeah, so this went up 170%, but $239 would send it to zero. Yeah. Engine, maybe, this has 138K. So like, maybe that's an example. This one pumped, like that's, but what did it do? But I don't know if that's just like a 24-hour thing. So there are things on here. So I see EOSDT. So like this one, the price is going to be stable because like the target's $1. So like this one's probably not gonna go up. And let's see. So I'm loading. Yeah, so like this coin alone, like stable coins are good to hold, but if you're holding a stable coin, you should be trying to earn interest on it. So ways you can do that are just on Nexo. Like if you're fine with the counterparty risk, Nexo is actually a really easy way to earn some interest on stable coins or on anything for that matter. Like so, you earn like 10% interest on your stable coins in Nexo. So if you want to be holding the stable coin, just because like I don't know where, like maybe on here it'll tell you what you can earn. Okay, so 300. So there's probably no trading activity going on, and so you make money on these stable coins by providing liquidity. But like on EOS, I just don't know of any places that are good to provide liquidity for these stable coins. So maybe try to transition that into like an Ethereum based stablecoin. And if you want to earn some yield on the stablecoin, if it's in small quantity, because gas fees can be pretty high and they can eat into it. So if you're in like the couple $100 range, or even a couple $1,000, like if you're fine with bearing the counterparty risk of just like allowing Nexo to hold your coins, go ahead and just like try to earn some interest on the stablecoin in there, or maybe take I don't know what the interest rates are on some of these other platforms that you can lend on. So like another one might be like Aave. So if you were to convert your EOS DT into say USDC, let's see what the interest rate is if you're lending stablecoins here. Okay, so right here on Aave, so these are three stablecoins: DAI, USDC, and USDT. So right now, 0.56 APY. So that's kind of low. Let's see if this. So is that right? Let's see. Or we want to deposit. Yeah. So like maybe take those stable coins and put them on Nexo. Because I mean, the stable coins is like you're already relying on a counterparty. So like adding another counterparty, like it like maybe hurts, but for these ones that are like truly pegged to $1, like USDC and USDT, then just holding on Nexo is fine. You can earn some yield. But with those stable coins, like another good use case of that is just like finding dips to buy. Like I pretty much never hold stable coins. Like rather than trying to earn 10% annual interest on a stable coin, like a 10% gain in crypto is really nothing. So I would rather like that. That's why I like Hex so much, because you can earn like right now Hex is paying like 25% interest per year to the average length, average size staker. And so if you're like a way above average length and average size staker, you're earning closer to like 30% interest annually. I want to buy things that are going to be earning super high yield, where like your balance is going up and where the price is going up. Like stable coins, like yeah, you can earn some yield, but the price is staying the same, and relative to other things, it's going down. But things like Hex, it gives you that yield opportunity and it has massive upside price potential too. So that's a so for stable coins, like yeah, you can earn some yield, but you know, just putting them in the Ethereum ecosystem, like moving your stable coins out of EOS and into ETH, uh, you'll just be able to find a lot more opportunities there, just because there's just like a lot more going on. So that's what I would take a look at. Um, Unless you're like really tuned in, like maybe there is some stuff bubbling up in EOS that is a good investment opportunity. Like there must be, like there's got to be something pumping in EOS. But just the frequency of things, going up so much, just all the activities happening on ETH. So, in this case, and sometimes it's good to be a contrarian and doing the opposite of what everyone's doing. But when it comes to like trying to find where the majority of the opportunities are, you kind of got to go with the herd on this one. So, but that great question. I never really like EOS is really interesting because it was the coin that had it raised the most money ever at the time, I think. And the way that Hex launched was actually very similar to the EOS launch, where EOS had a year of daily auctions. It's like a Dutch auction where set amount of EOS, however much ETH goes into the contract that day, the EOS is split up amongst them. So that's how like Hex's launch was happening, and it worked out pretty well. But EOS, like the problem with things like EOS is that, like being a token that like enables a smart contract platform, that doesn't necessarily mean the price is going to go up. Like its use case as a smart contract platform doesn't really help the price. Much like like in Ethereum, the use case of Ethereum as a smart contract platform, that's not the thing that pushes the price of Ethereum up. The thing that pushes the price of Ethereum up is other investments that are launched on top of Ethereum that people are investing in, because the gateway to getting there is through Ethereum. So things like Hex, like when Hex, so if we take a look at the Hex chart, because Hex was like really the first thing that really kicked off this like DeFi bull cycle. Like when everything else was selling off, like literally amidst like global pandemic, Hex had this massive run to the upside. And so like if we look at the so Hex chart and then the ETH chart, see if we can add. So Hex, let's see if these line up. Let's see. Okay, so this chart doesn't go back as far as I want. But a lot of the, like, when ETH price really pumps, when there are people that are buying ETH to buy other things. And if the people who they're buying them from aren't quickly selling the ETH. So whenever there's a lot of ICOs, like when we go back in time to the like the ICO boom, if we look at the price of ETH BTC, let's look at that. Let's see, BTC. That's another one. Poloniex is an older exchange. So ETH really pumps when there's a lot of fundraising going on. So like in ICO heyday, which was like late 2017 through 2018, ETH was pumping because all these ICOs were pumping. All these ICOs were raising a bunch of money, so people were buying ETH to buy into the ICOs, and then the ICOs would like sell the ETH over time. So like during that heyday, that was like ETH was really pumping, and now like ETH is kind of pumping again, and maybe that's like was partially kicked off by Hex. Maybe ETH would have kept going down, but like during this time, like March through April and May, like a ton of people were buying ETH so that they could buy Hex. And so maybe like Hex contributed to this like, kind of bottoming out on ETH was, like during this time, like literally since time Hex launched in December of 2019, that was like the bottom of ETH. So, Hex might have kicked that off, and then some of these other like DeFi coins that kind of came on the scene afterwards. That's really the time to be buying ETH. And so now that there's so much activity in DeFi, there's now is like a good time to be accumulating Ethereum because even though this first wave I think has kind of come like it's been craziness, like true craziness, pretty much since like Hex's big run up, down here, like Hex, all time, from like these bottoms measured in ETH, Hex is up like 2,000%. But like this first like 1,000% run, like pretty much since then, like there's been craziness in DeFi, and I think like with Uni, that was kind of like this big crescendo. I think like right now, like in the DeFi area, like the strong performers are like this is the time to accumulate them. So like Hex, maybe wait for a little more of a retrace, but like Wi-Fi, these others. But then also like it's good to just hold ETH during this time, because like right now like ETH is in a like it's in a strong uptrend. Like like the bottom has like formed itself over the course of a year. It's had another kind of resurgence. ETH is up from the bottoms. It's up like 100% in a retrace. It got as high as like 140% measured in Bitcoin. And now ETH is about to kind of visit these levels, and it's during an environment where there's a lot of investment activity in the coins on top of Ethereum. So the Ethereum dip like that we're seeing right now, like this on the weekly chart. Let's zoom into the daily chart. This is probably one that you want to be buying. So yeah, like you want to be averaging into this dip. Starting at about this level. This is a good level to buy because it's a price had hit off from below before. So buying around this level, like that's a good price. But price very well could keep going down. So like just be averaging in. You don't want to go all in all at once, but now is definitely a good time to start buying into this dip. So maybe if price keeps dipping, it'll probably hit here. If price keeps dipping, it'll probably hit here. If price keeps dipping, it'll probably hit here. So if you can just like average into this, like in the event that like Ethereum experiences like a longer like bear run, just averaging into these red lines, that's a good strategy. So we're at the first one. So ETH is definitely a good buy right now, for sure, because there's the fundraising activity going on. Just having ETH just like puts you in a position to take action on these other coins, because then what you can do is like you can like I've even I've like randomly found coins. Like what's an example? Like Comp. One time I like just like by browsing on this like thing that lists a bunch of things on Uniswap. Like just randomly one day I was like, oh, let's take a look at Comp. Like, oh, new coin. It's in a dip. Literally, I was like, oh, new coin. Let's see what's going on here. And I see, I'm like, okay, just listed. It's pumped up. Now it's in dip. Why don't we buy this dip? Then next day it's like up like 100%. And so like just because I had some Ethereum, I was able to just like quickly take action on that trade. So like what you do, like say you want to buy a coin. So like say we wanted to buy some Wi-Fi. So if you're on Hex.cash, if you click on this, it'll open this up, and it takes you to this this pair. So you can even just click like start from right there, and then you can click trade. And so this will take you to the page where you can swap ETH for Wi-Fi. So you click understand. So, and you could just, buy right there. You have one ETH, you can buy it. So just having ETH puts you in a good position to take action on these things. And like even for the ETH that you because you're not going to catch everything, but just like having some ETH is definitely good because in this environment where there's so much activity going on top of ETH, Ethereum is just like a good hold anyways. And so because there's all these things, a lot of these things are probably going to lose money, but sometimes things like literally, let's just look at these. All right, for A through B, let's find one that has like a nice name that single syllable, easy to say. Okay, bonk. Let's see what bonk is. Okay, bonk was pumping. Have no idea what this is. Might be a scam. I have no clue. In the last couple days, it pumped 500, 600%. That's a lot. That's pretty crazy. It pumped that much, and then it's retraced 60%. So this is probably one where, yeah, there's just not much liquidity. So that means that like it takes not much money to push the price up and not much money to push the price down. So, it doesn't like, you don't want to FOMO into things like this. That's like the worst mistake people can make is they just chase these pumps and then they just end up FOMOing in and they're the one buying the top, pushing the price up. So, you don't want to do that. Maybe try to catch. I'm not going to suggest catching that. We don't know what this is and it has really low liquidity, but maybe that's just because it's early and it could pump. Let's look it up. Random coin, bonk coin. What is bonk? Okay, so $200,000 of volume. Let's see what this is all about. Bonktoken.com. Proof of art. Okay, this is wonky. What is this? Okay, so let's see. There's a timeline. That's sometimes a bad sign because like what you're relying on is them to like complete these are like hard things. Like building web products is hard, building crypto platforms is hard. You're like relying on them to like do all this stuff. There's pretty cool marketing going on here. Might be a might be a scam. I have no idea. This might look like a money grab, but I have no idea. What is it? Should we buy some bonk? Are we gonna do this? Let's check out what's going on in the liquidity pool. Let's do some analysis here. This is pretty funny because this is definitely like we don't want to FOMO into this pump, but it's in a retrace, and so let's see if we can figure out like what's going on here. So big surge in price happened the other day. So let's see if we can open up from okay, so price pumped here and someone sold for 66. What? Let's see. Okay, that's kind of weird. I don't really know what was going on there. How many trades have happened? Doesn't appear like many. See, I don't really know what's going on here. Let's take a look. It's in a dip for sure, but I don't know. I don't really know what to make of this. I don't know. Maybe bonk pumps. I mean, this is like a common. This is sometimes called a bull pennant or a bull flag. It's where the price kind of goes down like that, and then price is also held up by this and makes this thing. So I don't know. This looks kind of like a juicy chart. You know, it's not like we're not at like the top of this. You know, maybe we're getting in at 200% higher than we could have, and maybe that means the price can go down to this level. But I don't know. Like maybe if something has like a big push up and then a big retrace, maybe that means that there's maybe some whales are starting to look at this thing. So I don't know. Maybe we'll need to look more into bonk. Let's see if we can find some information about the liquidity pool. Okay, so there's only 130 ETH. And wow, look at that name of this address. Or is that a... That is crazy. What? Okay, they had to have made this themselves. Okay, maybe you can create your own. That is pretty crazy. Let's see. Let's take a look at the main liquidity provider on Etherscan. Okay, so that looks like a... Okay, that's a burner address. Oh wow, so they like actually burnt a bunch of liquidity. That's interesting. So what that means is that they locked in a bunch of liquidity and they can't, they actually can't say, huh, maybe you want to buy some bonk. You want to buy some bonk here? Oh, we're about to buy some bonk. Oh my god. That's crazy. So, that's, I guess, kind of a good sign. 77K locked. And only 11% of the liquidity pool could be rug pulled. So, maybe we'll buy some bonk. Only 4 viewers on this stream, so maybe we can get in before people front run us. But you see that's literally like, what, like that's how abundant these opportunities are. Is that like, like this is very high risk. Like, do not put serious money into this that you can, put like movie theater money into this. Like, don't put a lot of money because you don't want to risk a lot because like, it could go to zero. That's what gives it enough energy to go up a lot, is that it could go to zero. But you don't want to lose all your money on something like bonk, which like we just randomly find just by looking at the charts. But sometimes, things can just pump, especially if they're early, and especially if they haven't dumped. Like if there's not like perpetual dump, then, that might mean that like the market's like found its bottom. And maybe that's what this big push up was, is like, maybe some people, know something that's going on. So I don't know. This might be something we might want to look into. And we found that literally just by looking right here, looking for a single letter, a single word coin that easy to pronounce in a good dip. I don't know. This literally, and this is like, why it's so good just to be there, like, to know how to use Uniswap, know how to read these charts. Because like you could randomly stumble upon like a random coin that could pump, could go to zero. So, you don't want to risk a lot on it, but, maybe this is our next like 10x breakout. You never know. So I don't know, like we'll see what happens, but you know, might be a fun thing to play around with. So I think I'm gonna wrap it up here. This is a lot of fun. We went in depth on a handful of coins, covered all the ones that I wanted to cover. If there are more coins that you might want to cover, we can do this again, definitely. So get in touch on Twitter or just on YouTube if you want to join the Dipcatcher Telegram. We can share an invite link to that. We talk about this stuff all day. So until next time, thanks for joining Dipcatcher Radio. Check you later.